What is up, everyone? How y'all doing? All right. What is up, my friends? My name is Market Cipher. Let's get into this. What is up, Curtis Hill? Great to see you. Appreciate the kind words, man. Bull Runner, always a pleasure. Jillian, what's up? Barb, Lucius, what's up? Fecker, good to see you. Mike, always a pleasure, bro. J Rock Smash, what's up? Welcome, man. Andrew Cameron, glad you made it, brother. Kango, good to see you, man. JB, how's it going? All right. So, let's get into this. What do we see today? Well, on the stream last night, we were talking about our liquidity targets, right? We're talking about coming up to attack our 3 liquidity targets. Let's redo the charts here. So the day opens, and what do? We quickly go take all that liquidity that we've been eyeing, as we said on the stream last night. Since we were back here, bulls couldn't quite get to it. Come down, grab some more ammo, mitigate the range, come up, swipe the liquidity. Now, what have we done after we swiped the liquidity? We've had a slight pullback, right? This is up only, right? We're getting a little pullback. Now, if you draw your momentum here, or your I am wrong line on this 4-hour uptrend, right? You'll notice that we bounced right off this trend line. I called this out in the Discord. Shout out to everybody who's in the Discord here. We did just come back to this trend line here. We're also finding support on top of this spider line. Also, this previous demand area here, I had this order block marked out. We did go a little bit further than the order block. Depending on how you mitigate your order blocks, you may consider this mitigated. You may not, because it's a wick and not a close, right? But we are also on top of this 4-hour order block. Now, as you guys know, we look at trend a lot here, right? We look at market structure. Now, market structure is great because it allows you to pull your fibs from the right places, right? We have 2 bearish candles in a row here, right? That creates a low on the 4-hour. If we pull our fib from there, you notice that we're bouncing from the golden pocket here, right? So we did hit our golden pocket, wicked a little bit below there into our 786 area. Now we're coming back up. Okay. Let's take a look at some of our indications here. Okay, so we are getting a little bit of a bounce. So the area to keep in mind, I just want to go over this before I continue with the macro TA, just because this might happen pretty soon. So if we do break this level, the 119,200, that would break your 15-minute market structure to be back in line with your 4-hour, right? And your 15 minutes generally going to be your entry time frame if you're looking for like a more swing trade. So if this golden pocket is going to be our low here, then if we do break the high here, that would create bullish market structure, at which point it's a little big of a stop loss. But if you're taking a swing trade, I mean, a 1% stop loss isn't that bad. But if you're looking for a retrace, you could also come down to like your 618. So if we break this, right, looking at this golden pocket area, which also lines up with this trend line here around like 118.4, be a good area to look. Okay, back to what we were looking at though. So if we zoom out to see if our uptrend is still intact here. So if we take the momentum that we were watching on the weekly, this blue line here, you'll notice we're still holding this blue line, right? Remember, this blue line is what we're looking at on the macro to determine if the uptrend is in danger or if it's going to continue. We got a couple more people coming in. Killowell, good to see you. Jeff Carlson, what's up, man? If you guys are new here, make sure you subscribe. Join the Discord, pinned to the top of the chat. All right. Let's zoom in. Let's see what we're looking at here. So on the 1 hour, that weekly momentum that we're trying to hold lines up with the 786 around like 117.5. So this is a very key level, right? So if we find ourselves before CPI tomorrow, now also look at all the confluence in this area. So similarly to when we're back here, right? And we're talking about how good this long looks because we just flipped our 4-hour market structure, because it's the 786, because it's the order block, because it's mitigating previous demand, right? We're stacking all these confluences onto why we're going to look in this area, right? Because a prepared trader is a profitable trader. The same way, if we look at this area down here, now it doesn't mean we're going to come all the way down here, right? But if we do find ourselves before CPI data comes out somewhere around 117.6, it's the 786 of our 4-hour trend. It's the weekly trend line, it's a spider line, right? It would be a fake out of losing this momentum here to come back up, maybe reclaim it, right? Breaks the market structure. So something to keep in mind, right? So the two things that I'd be looking at is I'd be looking at either this break of 15-minute market structure, which it looks like may happen now, right? Then getting a pullback, and this becomes your strong low here. Now, if you're taking a swing trade, you guys know that this could very easily not be, right? So what we're planning for right now would be like a model 2, right? Where you break market structure, you come back down, you get a higher low, and then you go out. But it could very easily also be a model 1. So a trick we like to use if it does break market structure here is to plan for that SFP, right? So let's say it stops here before coming back down. You can take your range deviation, and you can use that as your stop, right? Like 117.600, right? You get it closed below there, you're out of the swing trade. That's how you can protect yourself from getting like wicked around, right? Okay. Cool. So mark out that area on your chart where all of the confluence is here, right? And understand that you're looking for buys in this area. Now, if we're stacking confluences here, one thing that we can also do if we take on our weekly chart, if we throw a VWAP on last week, what do we also realize, right? Last week's VWAP is in the exact same area. If we take a VWAP from the lows, it's in the same area as well, right? We take a VWAP from this low, it's in that same area as well, right? So there's so much support in this area. So if we have our buy box here and we find the price down there, and you're having trigger hesitation, you see a 5-minute break of structure down there, take the trade, right? You want to take the trades with the highest probability of winning, right? Either take your 15-minute market structure break or take your stacked confluences down here, right? What also could you stack down here that could say, okay, it's maybe going to reverse down here? Well, you have unmitigated demand, right? Now, what's important? Right? We understand that we have, now it is internal structure, right? But it's still structure. We have a 4-hour strong low here. Right? We have a 4-hour internal strong low at 116.3. So anywhere in here that you're taking a trade, why is this appealing? Well, it's appealing because of risk to reward, right? Right? And if you were gonna run, like if CPI data shows inflation is getting better, right? It's getting, and they can cut rates or whatever. I don't really trade news, right? I just trade with the chart showing me. But if we get good news and we pump up to new all-time highs, then your risk to reward gets even better, right? If you hit your second take profit, it's a 4-to-1, right? It's a good trade, and you're putting your stop loss below a strong low. Okay, so that's kind of local stuff that we'd be looking at. It'd be cool if we get this on stream here. I'm gonna set an alert here. Look at that. You can even add the, is that the 1 hour 200 bar? Let's throw. Yeah, look at that. We'll make our box a little bit bigger. Right? It's also the 1 hour 200. Now, if you are a little worried about pulling the trigger, right? Oh, it's also the reversal zone on the 1 hour. Yeah. If we find ourselves down here tomorrow morning and we reclaim this trend line, woof, that is a nice long into data. Very nice long. Yeah, definitely. Okay. Okay. Yeah, there's so much confluence in this area. Yeah, definitely an area that you want to pay attention to. Okay. So right now we know that we're bouncing underneath the 15-minute 200, trying to break 15-minute market structure. Yeah, I like it too because it would sweep everybody who got long here into the 786. Whew. I mean, I'll take the trade here, but I like the sweep. I like the sweep a lot. Yeah, I mean, your trend ribbon's flipping blue now. It'd be great, like if they don't break market structure here and then pull it down, that would be awesome. Okay. So how can you trade this morning, right? So you obviously have your downtrending momentum. Also, you have your 3 drives, right? Your model 1 at the top, come down, break market structure here. If you're awake in the middle of the night, right, here's your clue to get short, right? Right, this is what topping structure looks like, right? You have 3 hits to the high. One, two, three, break of structure, comes down, right? Trade this distribution model, back down. You can even wait for it to lose this, but you got a strong purple trend ribbon. Looks very bearish, way overextension to the upside. Then it starts coming back down. We did take a nice long in the Discord off of 19,300. Didn't make it to the target, made it back up to the 50 EMA, continued dumping down. Now we're kind of accumulating underneath the 15-minute 200. Now going into dumping into data is good because that generally means you're going to pump after the data, right? As opposed to like pumping into data to just sell off. But I'm not a news trader, so I'm sure other news traders can help you more than that. But so that's how you can take the short this morning. As we're coming down, I'm more interested in taking longs, right? Just because of where the market is and our 4-hour market structure is bullish. And we're getting pullbacks into some nice fib levels. So we took this long here. And then we were interested a little bit. Where was it? Where were we looking? Oh, yeah. So we were interested a little bit here on this initial golden pocket tap. So I was telling the Discord that if we break market structure here, I was looking at the 3-minute. If we break market structure here, then we could get long, but we didn't end up breaking it. We ended up SFPing. This is why market structure is king, right? So we SFP the market structure high here. And the reason that this was nice is because we SFP'd the low, right? So we did a bullish SFP of the low at our key level, at our golden pocket, oversold, right? We're coming back up. Hey, if we break this, we can get long because we now have a new strong low to put our stop below. SFP this, bearish engulfing candle, your clue, we're going lower. We come down, we sweep the low, and we tap our trend line. Now, volume, guys, volume. The reason that I was interested here was because of this massive spike in volume. Right, so if you notice, we're dumping on decreasing volume, and then we get this massive spike in volume. And the reason that I've been interested in this area, right, this whole little accumulation model that's forming here, The reason that this interests me is because if you notice, we're having big spikes in volume down here, right? So it's telling you that there's interest in this area, right? Now, what we know about effort versus result, right? There's more volume in this candle than there is in this one, but the price comes down and we get this nice bottoming wick and the price comes back up. Now, if we look at something like a volume delta chart, man, there's so much selling in that candle. So yeah, that was trap shorts. A bunch of people went short here, or it was longs getting stopped out, but volume delta is not really as helpful in this candle here. Yeah, so a lot of times, the reason that I looked at it is a lot of times on SFPs you'll get volume looks like this, where the volume sells off and comes back up, and it lets you know that the price is probably going to reverse. Not as helpful here, so we'll save that lesson for another time. But what is important is understanding that all of this volume came in and we got a bullish close on this candle. Next candle engulfs. What does that mean? Oh, we're probably going up, right? At least short term, that's a short term reversal sign, right? Because with all of this volume, if the trend is still strong to the downside, with all of that volume, we should be closing like way down here, right? But since we're not, it shows that buyers are stepping in and absorbing that sell pressure. This is something that we've gone over on previous streams. It's how you can understand bottoming structure. I go over this stuff on the live because I want you guys to understand why in the Discord I'm telling you guys, hey, this is probably a spot to pay attention, right? Because we get volume confirmation. Hey, a lot of people want to participate here. We get an SFP. We're coming back up. Okay, if structure breaks, that's the proof that we're going to go higher. Structure doesn't break. That doesn't mean that all of this doesn't matter, right? All of this volume still matters. It just means that we might sweep one more time, come a little bit lower, and then if we get confirmations on that next sweep lower, that's even better, right? We get confirmations here. Now, what's the difference? How can you spot this? So if you're looking at a 3-minute time frame, you can spot this because the same thing that we were looking for here, which was the market structure break, right? You got it on the 3-minute, right? So you put in a new low here because you have at least 2 bearish candles pushing down, right? So this was your prior low. This was your prior low here. You put in a new low. You take out that low. You get 2 green candles to the upside, right? Which creates a high. Now, you get all of those volume confirmations, which is great. It's nice. And as a scalper, you may take that trade just off volume alone or off of like the candlestick pattern, right? You have like this nice bullish volume bottoming wick, and then you have a bullish engulfing candle. That's great. If you trade that way, you can take that. But if you're a market structure trader, you also have a market structure confirmation here, right here. Right? So you break market structure here. Range. Initiate, mitigate, continue, right? And you're participating safely here. Now, why are you participating safely here? Because you now have a strong low that you can put your stop below to come back up, right? You break momentum here and it starts to look way better. You break your 15-minute market structure, it starts to look way better, right? Are there any questions about this bottom here and how you could have traded this today? Any questions about why it was appealing here or why it was appealing here? Or anything that we've gone over? Or put a 1 in the chat if that makes sense. I'm going to drink some water. All right, cool. Do I use volume profiles? We do use volume profiles, not as like rigidly as some other YouTubers might, but I definitely do look at volume profiles to understand like where the value high or low is, or to understand like where the volume profile of last week or last quarter or last month is. I definitely do that. Volume is very important. Like volume levels and understanding where volume support and resistance is and all that is very important. Did not like that we did not sweep the weekend low. So what weekend low are you talking about? Are you talking about 116,300? You don't really want to come down here because you're losing your momentum, you're losing your 4-hour market structure. Then it starts looking like, you know, we're coming down to 115, this decision block. Then it looks like we're coming here. Okay, so just so you guys understand, so this right here is our 4-hour internal strong low. If you close 4-hour candles below here, the whole reason that we've been bullish since here on the 4-hour, right? The whole reason that we've been bullish since right here, the whole reason that we were giga bullish right here is because 4-hour internal market structure aligned with our 4-hour external market structure. That was the first time in this entire correction when it was more likely than not that the trend was going to continue. Now, we'll go back to what I was talking about, but if you guys watched the one-on-one that I did with Crypto Kim on Thursday, remember how I was talking to Kim, like I think the price was here or something? I was talking to Kim about how if you're a trend trader and you're looking at, I just want to get into a trade the next time that we're most likely to come back and attack our weak high, you are most interested down here. You are most interested in 2 spots, which is why we've taken 2. If you've been following this channel since here, you know that we have taken 2 swing trades. 2 swing trades in this correction with the highest likelihood of coming back up here. The first one was the golden pocket trade on our 4-hour. Right, the first one was here, our golden pocket trade. We were expecting to run, we had the exact same target. We were expecting to run the liquidity there. And then when that trade failed and we mitigated the range at 112,000, we broke our 4-hour market structure. We took another swing trade here at like 113,000 when we hit the order block in the 1 hour. Now, if you, and this works better now that we have more price action, right? And this isn't like, of course hindsight's 2020, right? But if you go back and watch that stream that I did with Crypto Kim, you'll understand, right? We were talking about how in this correction, if you're a trend trader, understanding when to trade is very important. Understanding when you're able to catch the biggest move up, right? Like as a trend trader, you want to catch this. Like if you're in a swing long during this move, you're having a fantastic time because you're impulsing up, right? If you're trying to trend trade this correction, it's gross. You're not having fun, right? You're getting stopped out. If you're a range trader, you're having the time of your life here, right? Everyone who pulls a volume profile, right? Short, high, long, low. You're having a wonderful time trading this. But if you're a trend trader, you want to make sure that you're participating in the market in areas where you have the highest probability to catch the next impulse wave. And if you'll notice, if you waited for your 4-hour market structure to match your, where's our chart? Sorry, flashbang, guys. There it is. So this is everything that we have been going over for like a week on the stream. Make sure you drop a like for this. So we were talking about how this was our valid external 4-hour low, and how this low doesn't count as structure because there's not 2 bearish candles, right? How we bounce off the 886, how this is your internal bullish break of structure to match your external structure on the 4-hour, and this is where we took the long, right? This is the order block. This is, we were talking about the jump across the creek. We had all of this planned. We were able to identify this accumulation model. And I don't say this to be like, oh, look at us. No, I say this to say you can do this too. It's just technical analysis, right? Like, make sure you subscribe, ring the bell. We go over this stuff. We teach it every single day. We were able to identify this accumulation. We were expecting for the initiation. This was our mitigation candle right here and our continuation. And we got all of that. So all of that is to be said that we don't want to lose this 4-hour internal strong low. If you're wanting 130K Bitcoin or you're wanting us to go to a new all-time high, you want to keep 4-hour structure or it's going to take a lot longer. So we don't necessarily want to come below 116,400. You should definitely have this level on your chart because it closed below there. We'd have to do a lot of work to get the structure bullish again to go back to highs. Okay? So all of the trades that you're taking in here, you can take in here with the understanding that you can put your stop loss below a strong low on your 4-hour. Put a 1 in chat if that makes sense. Awesome. What's up, Smashy? Good to see you, bro. Okay, cool. So, back to what I was saying. So, what would bottoming structure on the 15-minute look like? We know we saw that little 3-minute bottom on the 3-minute. Well, it looked like the same thing, right? So, we know that we're expecting an accumulation model. We just don't know if it's going to be this green dot or this green dot, right? We don't know if it's going to be a Model 1 or if it's going to be a Model 2. But in order for any of this to matter, this break of structure has to happen. So what we want to see is we want to see the 15-minute break structure here and then come back down for like either a retracement to this order block, right? Or a sweep, right? And then we want to see it reclaim, jump over the creek, flag out, SOS. Right? We trade these models all the time. Put a 3 in chat if you've made money off a Wyckoff model in the past month. All right? This is basically what we want to see before CPI if we're going to pump. This is what we want to see. So keep an eye out on this. Take a screenshot of this. Look at your chart. And this is what we're looking to trade. Awesome stuff. Also, momentum. So the same way that we have this weekly blue momentum line that we were able to determine whenever we reclaim this on the weekly that we were likely to continue our pump, right? This is our weekly I am wrong line, right? That we got faked out of down here. The same way that we have that, you have them to the downside too, right? So if you have your downside momentum here, generally, when you have your bottom, you'd want to see this momentum broke and retested, right? Which aligns with kind of what we're looking for. So you can also draw this momentum, right? You got a fake out of momentum earlier today, but you got that SFP and then you came down. So you can have your 15-minute momentum on your chart as well. Looking for that to break. And those are the kind of things that we're looking for here. Cool. So we have our area where we would flip bearish, right? If we had a 4-hour close below 116,400. We have what we're kind of expecting for bottoming structure here. And most importantly is just understanding that the 4-hour is now bullish. Understanding that we're now in an uptrend both internally and externally. Cool. And this would be what we need to get our 15 minutes to flip. Awesome. Let me just look at a few more things here. We'll go to ETH. Okay, let's check out ETH. Well, it's not feelings, Curtis. So it's market structure. So as long as the 4-hour remains bullish, we're staying bullish, right? Trading with the 4-hour trend. Now, why do you trade with the 4-hour trend? Because you can get saved by trend, right? So let's say, this is an important lesson too. So a lot of people will like share their counter trend trades and stuff, and that's great, right? Like you can take counter trend trades as long as you understand what time frame you're trading on, and as long as you understand that if you're taking a short here, you pay yourself here, right? You're not expecting to come all the way down here. That's fine then. Take your counter trend trade, take your profit, and get out, right? But when you're trading with the 4-hour trend, so the 4-hour, so our 4-hour breaks back bullish here, right? Let's say you long the top, right? Let's say you longed here, but let's say you longed 115,400, but you did, let's say 10x leverage. Let's say you're still smart and you were still risking 1% to 3%, right? Because all of you should be. Risk management, you guys know this. But let's say you long the top here and you had your stop loss underneath your strong low. By having your stop loss underneath your strong low, even though you longed the top, you sat through the pullback, but you got saved by trend and you made money. Right? So trading with the trend saves you. I'll give you a more extreme example. Let's say we're gonna get some of this. We already did Bitcoin, so we'll get some of this out of here. Make the point better. So we know externally that our 4-hour low is here, right? Let's say you long the top here, right? But you understand market structure. So you long the top, but you had your stop loss underneath your strong low, and you're targeting some ridiculous target like 150K, right? Because you wanted your 3-to-1, right? Because you understand market structure and you understand that this is a strong low, you sat through the pullback, and then eventually you were in profit again, and you'll likely be in profit again, right? That's why it's so important to trade with market structure, because if you shorted the bottom here, you got wrecked, right? Oh, maybe you were in profit and then you're wrecked again, right? Because you're against trend. So understanding that you're with trend means that even if you have less than an optimal entry, you can still make money, right? You can buy the top here, you can buy the top here, you can buy the top here, you can buy the top here. And as long as your stops are underneath your strong lows, you're making money. Cool. Okay. Man, ETH has been printing today. Jesus Christ. Okay, so remember, guys, what is your first step? Or does anyone know? What is your first step to do as a trader when you come to the charts? Throw it in chat. What's your first step? I'm going to grab a water. Smashy Prey, that's hilarious. Yeah, identify environment. Yeah. Trend, yes, correct. This high momentum, big time frame, small time frame. Yeah, identify your environment. Golden, no, we're not gambling, bro. I mean, if you are gambling on the gambling account, then yeah, sure. But your first step is to determine if your market is trending or ranging, right? Trending, ranging, right? So if you determine that the market is ranging, buy the lows of the range, make a bunch of money. Sell the highs of the range, make a bunch of money. Buy the lows of the range, make a bunch of money. Sell the highs of the range, make a bunch of money. Buy the lows of the range, right? Right? This is the same behavior that Bitcoin was doing whenever we were in between that range, like 115 to 120, right? It's the exact same thing. Just set alerts for your 15-minute buy and sell signals on Cipher Matrix. Walk away and come back and say, hey, does this look good whenever you get the signal, right? Now, you guys know that I would prefer that you take longs from the bottom of the range, because if you're in a bullish trend, you're most likely to break the top of the range, so one of these will likely turn into a bigger trade. But you can, of course, scalp the shorts as well. But I mean, it's awesome when you're in a range on ETH, because, or on something that's as bullish as like getting as much allocation as ETH is, right? Because if we go back here to the previous time that we were consolidating, and you take a look at the range, your job in a consolidation range, right? It's generally going to be a Wyckoff range, right? So you're going to get 1, 2, 3, right? Generally. Now, your idea is to accumulate a long at the bottom side of the range, because it's a bullish trend, right? So you're going to get your jump across the creek, you're going to get your flag at the top of the range, you're going to get your SOS out, right? So if you get a long at the bottom of the range, it's your highest risk to reward. Obviously, you trade back to like TP1 would be the reversal zone on the other side, or the other side of the range, however you want to do it, right? Which is already a 5 to 1. But then you get to catch the next move, right? So that trade turns into a 23 to 1 trade. Who doesn't want to take a 23 to 1 trade? Absolutely amazing, right? And it's repeatable as long as the asset's trending, right? Now, obviously, this range failed and broke to the downside, right? There were some clues here, but let's go back to when we pumped before. Make this point. I promise you it's worth the repetition. Okay, so, right? Bitcoin ranges. Your job, accumulate a long, bottom side of the range. Take that long. Two risk to reward, but it turns into, let's say realistically here when it starts to get choppy, right? You get your break of structure. Let's do it to the break of structure. Cool. 10 to 1 trade, right? Comes up, consolidates in a range again. Take your long, or if you do the EMA strat, you guys already know, but that's not the point of this. 6 to 1, right? Obviously, if you're still in those trades, it becomes more, but you wouldn't have held through all of this. You get faked out on this range, right? But this came back to a key level that we were looking at, right? And then you come back up. It's like the 1 hour. Or was it 4 hour? But you guys get the point. I say that because if this is the start of a new 4-hour leg, right? Then, and as long as we're inside, check this out. If you want to know when ETH is done, wait for it to fall out of the 4-hour reversal zone. Right? So you held your long from the bottom of here until it fell out of the reversal zone, retested it, you knew that we were probably going to come down to the other reversal zone, right? You're long in here, wait till we fall out of the reversal zone. Probably going to come down the other reversal zone. Right? So, if you're in a long on ETH right now, you don't need to close it until we lose the reversal zone. You're chilling. You're holding on for dear life and making money. Okay. Look at how bullish this regression trend is. It's like pointing to 2 o'clock on a clock, right? Okay. Alright, let's actually do some TA. Alright. So we're obviously ranging here. If we get good news for rate cuts, alts will probably pump until the actual rate cut. We know the Bitcoin dominance looks good, so it's in a range right here. Generally, I would expect, let's see, did it already get its 3? Yeah, so we already had, did we have a break of structure here? So I see this as like I see this as like this. I see it as 1, 2, 3. And then if that's the case, what we would expect to see would be that. But that doesn't mean that it can't do this into our green box and then go. It can definitely do this. Yeah, so the level to watch on the if we do get a sweep, this would be the equivalent of like Bitcoin doing the sweep that we wanted. If it does do this, you'd want it to close above 41.13. You'd want to see a sweep into the box and then a reclaim of the range, right? If you start to see this, right? If you see ooh, look, right underneath the 15-minute 200 too, man. Yeah, if you start to see it flagging out here, SOS mitigation. Off we go, then it's likely just going to go up. So, I mean, all-time highs is what, like 10% away? You think ETH can do 10%? I mean, it's done 93% in 50 days. You know, what's another 10? Shout out to these buy signals on the 4-hour. Okay. Alright guys, it's about that time. You guys have listened to me rant for a while. If you guys want me to look at your altcoins, look at your altcoins now. If you have any questions in chat, go ahead and throw them in chat. And we'll check out some altcoins. Appreciate all of you for being here. If you're new here, make sure you ring the bell, subscribe. Join the free learning Discord in the description or in the chat. If you want to get a Cipher Matrix, just hit me up on Discord. ICP, yeah, somebody requested that. Thank you, Joey, for reminding me. Okay. Yeah, it's still got some work to do. So I can tell you what I do like about it. I like that it's got a potential accumulation going on here. 1, 2, 3. Guess you could consider this like a jump across the creek here. Comes up, flags out. So for something like this, I would much rather, so if you notice where the posturing for the EMAs is, right, like the 50 EMA is going to get pulled up and cross the 200. I would much rather wait for this to initiate out of the range, mitigate the range, and maybe get in like $1 higher at like $6 after it's proven that it can initiate, rather than get in this like wonky accumulation range that may just fail to come down to the final demand here at like $3 before coming back up, getting like some sort of spring making a Model 1. I mean, I do like that it's got a range deviation here. I would just rather see ICP prove itself before jumping in on this, if I'm being honest with you. Not saying that it wouldn't be a good entry now. I just think that seeing it prove itself is better, right? So seeing initiation out. So if you want to get in, you know, you could set your alert here. You could say, and you call that ICP starting to initiate. And then when this alert goes off, you can wait for the mitigation and you can get in on a nice swing long that way. And you still have great upside to the, if this does decide to move, but you're not taking on as much risk of it just dying. Because there's so many bag holders on this coin. So many bag holders. Yeah. We can do some more short-term analysis because I know someone was asking. Short term, I think it'll probably pump from here because you just had your golden cross on your 4 hour. You're underneath your 200. Yeah, I mean, it's looking good to set up to initiate. I think for a swing trade, you'd want to look for, I mean, if you want to front run the initiation, this is not a bad spot to do it, if I'm being honest with you. But I think getting in $1 higher for peace of mind is worth it for me. Man, I told you guys, set these large time frame alerts on these top 100 coins. His buys just ripping it apart. Yeah, I mean, we got a little mitigation here. Not quite yet. Yeah, but I like where it's at. Yeah, yeah, I like it. I like it here. This would be for like a short-term trade, right? Or if you're trying to front run the mitigation. The mitigation is my most confident trade, but I don't mind it here for a short-term trade. You're in your reversal zone. You're getting a 1 hour buy signal printing. You're underneath the 1 hour 200. You're underneath the 4 hour 200 under a fresh bullish cross. Yeah, I mean, you could take a stab on this for sure. Where would you put your stop? Let's see. And the 2 hour 200? Yeah. It's not, yeah, not bad. Not bad. For a gamble, not bad. I mean, you could put your stop like, so I don't like that it hasn't quite touched this mitigation. I would say you can put your stop underneath 525. That's what I would say. If you're looking to get in here, you can put your stop under 525. Because you have like this nice volume support here. Like, see how the volume falls off a cliff? And then, yeah. I think if it comes under 525, you don't want to own it. It's likely going to come down to our blue box here. That's what I see in terms of both short-term and long-term on ICP. Cool. XRP? Yeah, James, we can look at XRP. Ooh, let's check out spider lines on XRP. Man, that trade banged. That trade banged. Okay. But that doesn't really help you guys now, so let's take a look. Oh, right on a spider line. Look at that. Look at that. Right on a spider line for XRP. Man, these charts are looking bullish coming into CPI tomorrow. That's cool. That's really cool. Okay. 4 hour. So obviously, I like this decision block here. $308.60. If we get like liquidity swipe down, before CPI tomorrow. I like 308.60. Yeah, TF, it looks good. Yeah, you're bouncing right off of Spidey right now, TF. So you can safely put your stop loss below this Spidey, generally. Target TF, sweeping the highs into this spider line. I'd say that's a good target. 343. What you want to see, TF, is you want to see it get above this point of control and hold it. That point of control is $3.17. If you get above that and hold it, yeah, wait, are you talking about this range deviation right here? Dude, that's a nice trade, man. Good job. That's a really nice trade. Nice catch. Yeah, I see what you're looking at, bro. Oh, underneath the 200 too, bro. Nice job, man. Yeah, you got your buy signal. Everyone got long in here. You sweep everybody out. Oh, you already know. Yeah, you got your stop under here. Nice. Yeah, 343. I think it's a good target. Obviously, you know there's liquidity in these areas, but yeah, this is all liquidity in here. I think you're at least coming here. Where is that? Yeah, you're at least coming to 323.68. Because all of this is liquidity. Nice. Okay, Dreams. So Dreams, what are you looking for? A break of structure. Oh, I called that last stream. Nice. Cool. Cool beans. Oh, wait. Was that the play we were looking at the very end of the stream? Nice. Nice. Yeah, I do. I think I do remember that. Yeah, we looked at it and it just looked really good. I do remember that. Yeah. Nice, bro. I'm over here like, wow, that was a really good setup. Yeah, that's funny. It's really funny. Yeah, I see this. Dreams. Yeah, your 15-minute breaks market structure here, 317.04. New strong low here. Use your stop below that. You got a 5-to-1 up to 343. I like that. I'd be careful. You have a little bit of a hidden bear div in here, but you're really oversold here. Like, you got a nice little W on your MACD. If we do come down, we have this setup here, right? Okay, so if we're gonna get a liquidity, if you'll notice, it's even very similar to the setup we had on Bitcoin, right? So if you're able to break 15-minute structure, generally you can wait for a pullback if you want to make your RR better, right? But you might not get it. Or you can enter here and you have a 5 RR. These are your new strong lows. Otherwise, if we're going to get a sweep, right, just understand that you could be stopped out to sweep into 308.60, but that would just give you the opportunity for a higher RR long, right? So then you would just wait for structure to form down here and get back in, right? Because, again, if you take like an 8 RR trade, you won't really care about this loss because you're going to have 7 times the amount of money when you're done of your risk, right, not your account. So that's just what I'd be aware of. I like this trade if it breaks structure, get in, new strong low, or a sweep down into this order block at 308.60. Either way, your first target is liquidity at $3.23.26. So Dreams. So the reason that my target is that I think 323 is coming. Now, keep in mind, you think 309 to 310 is coming? Yeah. So 308 to 309 to 310 is still where this order block is, right? So if we get a sweep before CPI, we could still definitely come down there. I'm not saying we can't come down here. This is the best trade setup if we come down here, but this looks good without coming down here, is what I'm saying. Like in terms of risk to reward and everything. Now, in terms of why this is going to get taken, so this is inefficient in terms of like smart money concepts or liquidity, right? Because each one of these is a lower high, right? On the way down. So when you have a bunch of lower highs here, it creates liquidity above each of these highs. Everybody who went short in here got a free ride, right? And they're counter trend shorting, they're not paying themselves, and then they're coming up to get wrecked. So everybody who went long here can sell into them. Because when their stop loss gets hit from going short, they have to buy back their position, and everybody who went long here can sell into them. Right? So the market is seeking liquidity to exit the longs that were built down here. And that liquidity is above each one of these highs. It's the exact same reason that on Bitcoin, it's the exact same logic as here. Right? So the same way that last night at the market open, right, that we were able to call that these highs were going to get run, and they did get run so quickly, right? It's the exact same reason, because there's stop losses here, stop losses here, stop losses here. Everybody who's long in here sells into their buys to exit their positions, big players, right? So that's why those targets got ran so quick, because there's so much liquidity in them. We also know the stop loss stuff here, right, obviously. That's why you'll see me put a line with like dollar signs here marking out liquidity, and it's just showing that there's a lot of stop losses in these highs that never got taken on the way up. That's just resting liquidity in the charts to be taken. If that makes sense. So that's the same logic for why nice. Yeah, we did look at that position yesterday. Nice, bro. Spider line. Oh wait, this is the never mind. This trade I just put on. Never mind me. Okay. Doing too many things at once. Okay. That's why this liquidity here. Notice how it's like it's the same idea, right? It's all the stop losses in the previous high. It's gonna get taken. As soon as market structure breaks and the bulls are like, okay, we're going up, we come target these. Cool. Okay. ENA, yeah, we can look at ENA. I own a lot of ENA on spot actually because of shout out Crypto Kim. Got me into ENA at I think like 26 cents or something. Shout out to Crypto Kim. All right, let's take a look. Oh wow, I'm up. Nice. Okay, so zooming out here, we came up to mitigate previous supply. I gotta change this since I'm not using white charts anymore. We'll call this stream supply. Okay, so we came up, we hit supply. Got what we would expect, kind of a bearish reaction off of that. We also hit this order block here, it's confluence. So what do we know on the way down? We know we have support here, 70 cents. Let's zoom in a little bit. Okay, so one important note on ENA, right? There's no 4-hour structure in here. This is not 4-hour structure. Right? The same idea as like what we saw in Bitcoin before. Now I have a feeling that if I take my 4-hour low, which also means that all of this is internal to this low. So externally, our 0.5, yeah, so not saying we'll get this, right? But just thinking out loud here. This is our decision block in discount. So this would obviously be appealing. Down here at 66 cents. 70 cents is also appealing. If we take our internal 4-hour structure, well, let's get our golden pocket first. So externally on our 4-hour, our golden pocket is right here at this decision man, previous highs area. A lot of confluence to mark here. A lot of confluence in this area. If we get a bigger drop on ENA, right? A lot of confluence here. If we look at our internal golden pocket, that gives you, yeah, these are the two areas I would look. I look for 70 cents. And I'd look for 67 cents, somewhere in this area for a retest. Otherwise, a break of this high on the 4-hour allows you to use this as your new strong low. And then if you're looking for a swing position, you can get in on the break of this with your stop loss below. And that's a 5-to-1 trade. Okay, so this is what I see. You have a couple options on ENA. You have either your breakout continuation trade, right, where you use your new 4-hour strong low as your stop loss. So you have this first trade. So you have this 4-hour breakout trade. You also have your pullback trade. I would say watch for 15-minute market structure break out of one of these two levels. So the first one would be 70 cents. And the second one would be this decision block, obviously the higher risk to reward spot, which is at basically 67 cents. And how would you set up those trades? Well, you'd be watching your 15-minute market structure. Initially a 5-to-1 trade that has the potential to turn into a 21-to-1 trade because you're trading with 4-hour market structure. You're waiting for your entry time frame, your lower time frame, to match up with your bias time frame, your 4-hour time frame. You're taking the trade, right? Because we know our 4-hour strong low is way down here. So we're making our risk to reward better, and we're getting a higher risk to reward trade out of it, right? So that would be one way you'd set it up, or you'd look for 15-minute time frame to come down, break there, and do the exact same thing there. Right? Same thing. Right? Exact same thing. Now, why is this an amazing way to trade, right? Why do we use market structure? Because you're not getting FOMO, right? If it comes up and closes the 4-hour candle above here, great. You have a 5-to-1 trade down here in ENA, right? If not, you're waiting for the pullback and you get a way better RR, right? But you're not just buying in no man's land in the middle, right? You have nowhere to put your stop loss. Where are you really going to enter? So here's the lesson. Are you really going to enter here and place your stop loss 39% down? Because that's your strong low. Is that appealing to any of y'all? It's not appealing to me. So make sure you set up your trades. Make sure you find the high risk to reward trades where you have the highest probability of success. And don't FOMO, right? The idea is just to find opportunities where you have a high risk to reward. Take those opportunities. People don't understand that if you're risking 1%, but you're taking, what was that, like a 20 risk to reward trade? Or we'll just use this example. Why is this not right? Oh. Okay, let's say 13, right? If you're risking 1%, okay, you lose the trade, you lose 1% of your account. You win the trade, you get 13% on your account, right? So it also gives you the flexibility to lose 2, 3, 4, 5 trades in a row. And as long as you're taking high probability setups with good risk management, over time you're compounding, right? And you're growing your account. Cool. So that's kind of the trade setups that I saw. If you want to look at that, Julia, just screenshot it. Go back in the chart and screenshot it. Okay. Yeah, like we're still in the reversal band. We could still, by all means, continue up, right? But you get the best probability by waiting for that break. But we're obviously oversold a little bit. We can come back down. Okay. Yeah, that's what I see for you now. Now, scalping's a different story. But you guys know the drill. You guys understand how to get in, right? We go over this all the time. 50 EMA, crosses the 200, buy underneath the 200, buy underneath the 200, buy underneath the 200, profit, profit, profit. You guys know the drill. What's up, Max? Welcome in, buddy. Okay. Dang, a little bit of a stronger stream today. Or longer stream today. Stronger. Longer and stronger. There we go. Oh, man. Alright. AMP. Let's check out AMP. AMP. Where can we even trade this? Okay, I guess Max C. Curtis, you really want to look at this thing, man? Where's the full history of this coin? Bruh. I mean, buy it on spot and set a take profit here. buy it on spot and set a take profit here and make like a 2x if that's your goal, right? I mean, I wouldn't trade this on leverage at all. I wouldn't touch this with leverage. Yeah, and I think this is just a spot play, right? I mean, I think it's pump, dump, pump, dump, pump, dump, pump, dump, pump, dump, pump, dump. like, all like, yeah, yeah. I think you trade this on spot, buy low, sell high. I think it's a great way to, you know, get your random like 4x, right? If I had to guess, these pumps are just going to keep getting lower and lower. But, yeah, you may be able to get another 2x out of it. Yeah, just buy it on spot and set a sell order here, top of the range. What I would do. All right, Curtis. Yeah, that makes sense then. I agree with you, man. I thought you were looking at this as like a trade or something. Yeah, I wouldn't touch this with leverage. It looks like absolute dog doo-doo. But, yeah, so you can make your occasional 2x on it. Definitely. I really don't see a point in doing TA on this, man. It's just a pump and dump over and over again. Cool. Injective. Yeah, we can look at injective. After that, chill guy, and then I think that's... And then we'll do... Yeah, we'll do Vine. I think Vine is very similar to this. I think I was saying that's like spot only, but we can take a look at that as well. Yeah, Curtis, I'd just be careful. I wouldn't throw like a large amount of money in this because there's not really a viable place to like put your stop loss. I mean, it is spot, so like, yeah, just throw in like a reasonable amount of risk, like 1%, and look to double it over, triple it over and over again. That'll work. No, and Curtis, I totally get it, man. I wasn't trying to like. It's all love, man. You know that. All right, let's look at injective. Let's see, range, initiation, mitigation, continuation, SFP. Order block. I will say this, Injective is following market structure TA very well, right? Even like the bounce here from the decision block off mitigation, very, very nice. Following its demand chain. Look at our 1 hour. 1 hour is nice. You had your golden cross. You're underneath the 200 now. Would expect a bit of a pump here. Hitting your reversal zone. Let's look at our 4 hour. So did we actually manage to break for? Ooh, okay. Okay, yeah. So that I can do something with this. So we break our 4 hour here. Now the problem is out of that break, we set a new low. We come up, we break 4 hour again, and then we break 4 hour bearishly here. So you're under bearish 4 hour market structure. Now it looks like you do have something going for you at least here. So you're under bearish 4 hour market structure. So generally what you would expect is a retest for a lower low. Likely into this bad boy here. So that's just something we can be aware of. Generally, we would expect it to come down to 13,215, right? Which would coincidentally also be underneath your 4 hour 200 EMA, right? Would be nice. Yeah, so I would set an alert here for demand. But something that it may have going for it, going into CPI, is it does look like there's a possibility that, yeah, that this could just be a range deviation, right? So how do you play that? Would have gotten in here. Stop loss below the low. Targeting the premium of the range. Nice little 5-to-1 trade you could have taken there. So it could be in the middle of a range deviation here. But likely under bearish 4 hour market structure, you're going to come down here for a break somewhere in here. Like a 15-minute break out of this demand, I would like. Logically, following market structure, this would be where we should expect it to bounce, right? 13,215. Okay. Let's zoom in a little bit, though. Let's see how good of a job it's doing out of this range. Oof, yeah. Under this range deviation. So you set a new low here, set a new high. So it's similar to a lot of coins, right? It's waiting on its 15-minute market structure break. One, two, three. Yeah, I kind of like a model one, like a 1, 2, 3. Back up. If it's able to break here, then it's a similar idea to the other coins we've been looking at, right? Like range, initiate, mitigate, continue. In which case you would get in somewhere on the mitigation with your stop loss below the new strong low. Looking to take it up to premium of the range to your first target. This little order block. Bad boy right here, right? Target 14,702. Let's see if what our RR is there. Yeah, you're looking like a 3.62 RR. So yeah, so I would set an alert at 13,913 at these highs. You flip your 15-minute market structure, come back down probably to this order block here, but like somewhere for a higher low. Up you go, up to your target up here. Otherwise, if it's going to do what we're expecting other coins to do, come down for its third low into this demand, look for a 5 to 15-minute market structure break in here for a ride up, giving yourself a better risk to reward, like a 7 risk to reward. Those are the two scenarios that I see on Injective. I hope that makes sense. A little bit of a longer stream here, guys. Bear with me. Okay, what was the last coin I wanted to look at here? Yeah, we can look at Choga for you, Jenna. Let me look at Vine first for Max, and then we'll look at that. Yeah, this thing. Okay. Yeah, so what were we talking about last time? Just setting a spot order, just trading this on spot. You were looking at Market Cipher A and B, and it looks like it wants to pump. I do have your TP around 0.13. You were TP around 0.13. Okay. Man. I'll tell you this, man. If your 50 crosses your 200 on your 4 hour, I wouldn't expect it to come here right away, right? If it's spot, it's a different story. But you want to see, okay, so here's what you want to see. You want to see this 200 hold as support and then reclaim the 50. The 50 holds the support. If you start holding your 50, so notice how it's rejected off the 50 once, twice. If you want to see it flip this 50 EMA to support, you get the 50 EMA to support, you can talk about your targets. Obviously, your first target, though, is here. Second target's here. So you have two things in your way. So you have 8 cents. I'll tell you this. You come above your high here. It's not really your high because your high is up there, right? But this is like the doorway. So your first resistance is going to be at 84.56. Likely you're going to SFP this and come at some shitter coin, probably come down to here. Come back up, probably come down to here. And then if you can make it through here, you can talk about getting to your target. Yeah, you want to see it reclaim the 50. If it loses the 200 again, it's coming here. If it starts trading underneath the 200 again, it's attacking this liquidity here. You could get a nice SFP entry off of that, but that's kind of the best guidance I can give you there. If it reclaims the 50, you've got these areas that you would consider taking profit at. Certainly at this one. Certainly at 9 cents. 9 and 1/10 cent. Right. This is going to be hard to break through. I would take profit there. But yeah, get above the 50, lose the 200 and get out. Cool. You might look for a spot buy if we lose this low, like an SFP down here. Alright, gonna look at Chill Guy, and then we're gonna get out of here, guys. Great stream, though. Make sure you hit the like, make sure you subscribe, make sure you join the free Discord. Appreciate all y'all being here. It's a good stream today. Okay. Alright, let's start over. This stuff's confusing me. Alright. Alright, so you break your daily market structure bullish here. All of this is internal. All of these breaks are internal. We don't really care about that. You grab your fib. You come down to discount. Amazing buy here. Discount. You sweep everybody's stop losses who has it based on some arbitrary internal low. Grab all that liquidity. You break. Oh, there's no break here internally. Okay, so let's look at 12 hour. So, because this is probably the most important part right now. So we know that we've come down to a good retracement point on the daily, right? We know that we've mitigated, or that we've range, initiation, mitigation, right? We know we've mitigated, so that's cool. So now we're looking for somewhere where we can have some sort of structure. We don't have any daily structure in here. Why? Well, one, because it's all internal, right? But two, because this is only one red candle, right? So we know we got to zoom in. So we zoom into our 12 hour. And see that we break structure here. Range, Initiation, mitigation. I see why you want to look at this, Jenna. I like it. Yeah, I like it. First target's here, second target's here. Obviously, if it comes down a little bit more to like discount of the range here, you could look for along there as well. It's going to be like, you'll get a little bit better. Instead of a 6, you're going to get like an 8, almost a 9 risk to reward. But you could take like half of the position here and half of the position here. And if you're taking it, just understand there's like a 10% stop loss. It is a meme coin, right? But yeah, I like it. So you flip your daily structure, you come mitigate. You flip your 12-hour structure, you come mitigate. I like it for a move up. I think it looks good, Jenna. Hopefully that answers your question. If you have any other questions about this, because I don't know like where you got in or whatever, we can you can hit me up on Discord unless you can type it pretty real fast here. Thank you. All right, cool. Answer it. All right, guys. Well, thank you so much for being here. It's a great stream today. We went over so much awesome stuff. I love being able to share this knowledge with you guys. Make sure you join the Discord. Make sure you like the stream. We'll be live again tomorrow. My name is Wave Cipher. Trade safe. Much love. Wave Cipher out. Night, y'all.